After the big announcements that came from the budget this week, many of our investors have reached out and said that they want our comments on how this will impact the investment strategies offered by Wright Research and what would be the broader impact on the market, how this impacts your investment direction and your asset allocation. So these are some of the questions that we are going to cover in this session. So as an investor in the equity market, I'm definitely a little bit concerned because, these higher taxes that have been raised, the short-term capital gains tax has been raised, the long-term capital gain tax has been raised. And as equity investors, especially active equity investors who are doing momentum-like strategies, we definitely do have to pay slightly higher tax to the government, right? That is for sure. But yes, I think our strategies will still continue to be attractive. I think the differential between the returns that an active strategy like us can give versus what the market sort of gives, I think that still continues. There's still money to be made in equity strategies, but obviously we are paying a higher tax to the government. So if we remove the tax element, I think there were a few positives in this budget as well. I think the government is collecting more money and sort of trying to reduce the fiscal deficit, which makes the country a stronger country fiscally. There are also a number of interesting measures announced on the infrastructure front, where the government is continuing on the infrastructure spending. On the consumption front as well, right? There were a number of interesting measures announced on the agriculture, on the horticulture, even on rural as well as urban housing, skilling of workers, employment. But yeah, the capital gain definitely has come up and hit us as a shocker. So while the budget is trying to find a balance between the populist measures as well as the consolidation, I would rate it 6 out of 10 from an investor's perspective. So yes, I think the biggest change that has happened in this budget is on the capital gains front, right? And that is the big questions that our investors have, that how is that going to impact my investments with Wright Research or my investments in the mutual fund space or in other assets. Number one is, you increase the long-term capital gain tax. So even if you're holding a stock or a mutual fund for more than a year, you will end up paying 12.5% instead of 10%. Secondly, short-term gain tax has increased. So if you are holding any stock or mutual fund for less than a year, you will let go of 20% of the profits as tax instead of 15%. Thirdly, the indexation benefit that has been removed will end up impacting sectors like real estate. So there has been a lot of math that is going around. If you're holding a property for less than 5 years and appreciation hasn't been that much, then your tax outgo has increased a lot in comparison to the previous rules, right? So real estate stocks therefore were impacted a lot when that announcement came. Finally, on the derivative front, I think there's been a lot of noise that was made that the derivative activity has increased a lot in India, and therefore STT was increased for the derivative segment. When high frequency traders do very active trading in derivatives, they end up making very small profit from each trade, right? So when this STT hike has happened, which it will make those derivative trades little less in terms of profit margin, so it should reduce derivative trading by a bit, I assume. So all of these measures, I think, that were announced were done by the finance ministry to discourage people from very active participation in the equity markets, very active participation in the derivative market for some reason. But still, I think, if you're looking at growth, there is no better place for growth apart from the equity markets, right? And I think the earning momentum continues, India's growth story continues, and the equity market will continue to give that strong growth opportunity. So that's a very interesting question. See, many of our strategies that we offer are not long-term strategies. These are short-term strategies with a mix of long-term, right? So if you look at analysis of our oldest strategy, which is the Wright momentum strategy, you would see 70% of the gains are short-term gains and 30% of them are long-term, right? So it doesn't impact our strategies by a lot. We could look at more optimizations, right? Trying to modify the strategy to tilt more toward long-term gains, but at the end of the day, our strategies work because of their tactical nature, their ability to switch between sectors and industries and pick up themes that work in the long term. Now, within our strategies, the focus is definitely going to shift from infrastructure-led themes to more consumption-led themes, maybe from more momentum investing to value investing and quality investing, but that is yet to be seen. So, in terms of the crucial things that you need to understand from this budget, I think there are a few crucial points. Number one, there's going to be a big impact on the real estate taxation. I think that segment is going to see some very significant changes, right? So, if let's say you have invested into a property for more than 10 years or 20 years, then you would have been looking to get indexation benefit on your taxation, and now with the shift of this regime, if let's say your gains are very high, you might end up paying higher taxes. There's a lot of math involved. See, if your profitability is high, then this sort of comes and hits you more. There are cases where this new taxation might in fact be better in comparison to the older taxation, but those cases are very few, and in effect it does impact real estate a lot. Now, second big change that has happened is that there are a lot of effort that have been made to simplify taxation. Angel tax has been removed, which is a big positive. The direct tax code has been improvised in various cases. There is also effort to improve disputes in the taxation laws as well. Third big thing is obviously fiscal consolidation. The government is going to make more money from taxes, but they're not spending it a lot. Not a lot of populist measures were announced. So I think this will add to fiscal consolidation. Our fiscal deficit will go from 5.1 to 4.9. Now, finally, another important thing in the budget is that a lot of focus was put on better research methodologies for agriculture, for horticulture, similarly, better skilling and getting more people into the workforce and putting effort in making sure that happens. I think those were big positives. In terms of infrastructure, we got the same allocation as the interim budget. So not a lot of positives that came there, but still I think infrastructure continues to have a positive bias because our budget is still quite high. Finally, I think because this was a little somber budget, not a lot of big announcements, I think this would lead to maybe correction in some of the frothy buckets, right? Places where there is very high valuation and where not a lot of attention has gone, you could see some corrections happening there and focus shifting towards the more conservative, more defensive segments like consumption, rural development, etc. So, we've not taken any drastic measures to change our allocation post the budget. I think we are still sort of watching the effect. I think, it's a big shock, and that's what we saw in the reaction that came in the market, right? There was a big correction and then, market recovered. Market went down almost 1.5% and then recovered. I think people are still digesting a lot of long-term effects of this budget. See, the government has discouraged people to come into the equity market aggressively, and there's going to be some sort of correction on that front. But still, you're seeing your brokerages and your wealth management companies all rallying like anything. So there are going to be longer term impacts also. See, if real estate is not attractive as an investment, then people might not put in money there and put money into the equity market. Similarly, even on the debt side, not a lot of benefits are still out there. Equity is still attractive in comparison to debt. So, the investment could still come to the equity market. Consumption as a theme could also be attractive. You're not going to invest money into the market, then you will use it for your consumption, right? So a lot of long-term effects have to be seen. We would also try to experiment and see how we can tilt a little bit towards longer investments. Obviously, allocations we see shifting towards more consumption-led companies. Rural companies which are already there in our portfolios will get attention. I think fertilizers is a theme which we picked up, which has got hit by a budget, but we still see it gaining from the rural theme. Some of the infrastructure stocks which are at a very high valuation, we did not hold many of those, but the infrastructure stock that we are holding right now, we are watching for them. See, the growth trajectory of the Indian economy hasn't been impacted, and if the government is collecting more money and going to use it for fiscal consolidation, that gives us strength as a country, right? And gives us better ratings probably. As per the budget, I think there are various interesting sectors which will get attention. So number one is the consumption theme, the rural theme. Measures were announced for Horticulture, we saw stocks like Avanti Feeds jump almost 20% after the budget. Even on the food segment, we are seeing so much demand in food-led stocks. So we have some of the stocks that we've already named, like L&T Food, KRBL, which got very good growth today. Textile segment is seeing a lot of interesting growth. Sugar segment, a lot of talk about the new age manufacturing and that segment. So electronic manufacturing as a segment is doing well. The discretionary theme is doing well. We saw Ethos, the stock that sells expensive watches, which has grown very drastically after the budget. So the luxury goods segment stands to gain after the budget. Similarly, the focus on renewable energy continues. The government has that segment as a focus area, and there were measures announced for the solar manufacturers as well, and that segment continues to be strong. Obviously, infrastructure, which is the favorite of the current government, got the same budget that it got in the interim budget, which was not low, but there was no special attention that came in. Apart from it, I think pharma and IT continue to be gaining momentum. IT, after the earnings from TCS and Infosys, has gotten a lot of positives, and the pharma segment is also seeing so many stocks gaining and forming a longer term trend. So these are some of the sectors where we are putting our focus on. So this was a short analysis on the budget. If you think any of the questions were not answered, please do put it down in the comment section. We'll be very happy to reply to your questions. If you think any of your friends or family could gain by watching these videos, please do share it across and subscribe to our channel and hit the like button if you liked it. So until next time, happy investing.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.